Good morning, everyone. Hope you guys are doing well and had a great weekend. So, in today's video, I'm going to talk something very interesting. I'm going to talk about falling pace of sales growth, but increase in profit. I'm going to talk about whether it is a good sign or whether it is a bad sign when we look into this. When I was monitoring the Q3 results for the companies on Screener, I found something interesting. There was this one company called GG Engineering Limited, where the sales degrew by 16%, but the profit grew by almost 395%. Okay, so last year, the same quarter, they had a loss of around 18 lakhs, but in the same quarter, they had a profit of around 4 crore 4 lakhs. So I was like, okay, I understood what is happening, but I wanted to see how other people look into this and what do they think about it. So I ran a poll on Twitter, sharing the results of the company and asked people whether is it a good sign for the company or is it a bad sign for the company. So when the poll got over, I wasn't surprised by the responses which I got. Half the people said it is a good sign, and half the people said it is a bad sign. So what I want to share from my perspective is like when we just look at the numbers, sales going down and just PAT going up, we just cannot come to a conclusion whether it is a good sign or a bad sign. We need to go into the details. We need to look at you know, the profit and loss statement to understand why the sales has gone down, and at the same time, how the profit has increased when even the sales has not increased. So when we look into the, profit and loss statement of this company, we see that their purchase, one of their expenses, which is purchase of stock in trade, has reduced by almost close to 20 to 30%. So because of which their overall expense has reduced and their profits have increased. So you might be thinking, oh, it's a good sign, the expenses have increased. But we need to see what kind of expenses have decreased. Here, the expense which has decreased is purchases of stock in trade. Then generally, the company does this expense or buys the stock in advance in anticipation of future growth. And when a company does not do that, or it stops buying and it keeps it very limited, this shows that the company is not expecting a very good future currently. And that is the reason why they want to conserve their money and they don't want to spend too much when the demand is not there. So, in short term, yes, there is a profit for GG Engineering Limited. But from the long term perspective, if the sales does not come up, if the sales do not grow, they cannot sustain this level of profit increase, which will be a problem for them. So whenever we look at the results of companies and when we see the sales are decreasing and the profit are increasing, we need to look into detail. Why is it happening? Like in this case of GG Engineering Limited, when we look at the purchase of stock and trade, we clearly know that they do not anticipate any growth in future, and that's why they have reduced their expenses, which is actually a bad sign. Because at the end of the day, without the sales growth, the PAT can grow up to a certain limit. After that, it will stop. There won't be any growth. Because if you look historically, any company which has grown and which has made money for its shareholders had a fantastic record of sales growth. They have always grown continuously. Yes, there could be exceptions due to market conditions or certain unexpected events where for a few quarters or couple of quarters the sales have not grown, but that is an exception. Otherwise, sales growth has to be there for profit to increase. So, hope you learned something new today. So, whenever you are reviewing the results of the company, always keep an eye on the sales growth. Just don't look at the bottom line because bottom line can be deceiving. Let's take an example. My sales are not growing too much. What I can do, I can reduce my other expenses and my profit will increase. But that too is not sustainable and not long lasting. It can be up to a certain period of time. Once that measure has taken and if the sales growth is not there, where will the extra increase in profit will come? So sales growth in negative, in short, is a bad sign for the company. We always need to be aware of that. Yes, there could be few exceptions, but those are very far and few in between. So always remember, sales growth is the key for any company to increase its profit, to increase its EPS, and to reward its shareholder. Okay. I hope this video was useful and you learned something new today. And hope to see you again. If you like this video and learn something new, please do like, subscribe to my channel, and so you can see such videos in future. Thank you so much. God bless you.